going to be talking about how to get high returns of commercial property with social impact investing. So a couple of reasons, concerns about scarcity in homing at the moment. And we all know that it's becoming increasingly urgent. We'll drill down a little bit further on that as we go. Reasons why impact investment and investing is the biggest opportunity today, and why you should consider getting involved in this area. And can you invest in social impact projects that make the numbers work for you in your portfolio? So we're going to be drilling down a little bit as we go, but that's just the heads up on it. My name's Mish Daniel, and for those of you who don't know me, I started investing in real estate in 1988. I've transacted over $82 million in real estate. I've got experience in residential development, storage, commercial, industrials, renovations, my absolute best, and flip deals over those years. I ran a multiple of manufacturing businesses, and I've got basically 33 to 34 years of experience in mentoring in business, in property and growth strategies. And my good friend and business partner, Symon Peters. Simon's been investing in development properties and has been a developer for 35 years. He's transacted in New Zealand and Australia, focusing on commercial, industrial, land subdivision, residential developments. And I'm going to hand it over to Symon. So welcome, Symon. Thank you for joining me today.
Pleasure.
I might have missed a couple of things over there. If you want to just let us know a little bit more about you.
Yeah, well, I don't think you did. I suppose my experience in the development field, 360 Collective is an advisory firm I founded just around about 4 years ago. But essentially coming from a background in my early 20s, I started in New Zealand. In fact, before my 20s, I started as a labourer on a building site. So I've sort of worked from the bottom to where I am today, and got a good experience through the whole process of construction, what actually happens on site, contractors, consultants, and then right through to funding, acquisitions, and in every area of property, but mainly because I was interested in every area. I mean, back in New Zealand, I owned a lyric theatre at one stage. I bought from Receivers at a bargain price of $450,000 from memory in the early 90s, and had no idea how to run a lyric theatre, but it got on the front page of the local Herald in Auckland, and I managed to employ a general manager who ran the university lyric theatre back in the day, and he was a sort of semi-retired chap, and he wrote me a letter, and I said, well, listen, Frank, I know nothing about lyric theatres. I know a lot about property, I reckon. This is a good buy. It's a good building. It was, worth a lot more. And he ran that for me for 18 months, and we sold it, doubled our money. And, I probably didn't really want to sell it, but I had a partner. He wanted to sell it. I love old buildings. So the other highlight I could mention would be the fact that I bought the airspace, the first airspace deal in New Zealand ever done in Auckland off the Auckland City Council. I bought the Beresford Street car park airspace. And again, never built a high-rise, never built anything, had hardly any money in my bank account, but I managed to put the deal together with the council, and we developed 42 apartments. I brought a couple of partners in, financial partners, and yeah, it was an exciting project, very innovative. We were selling airspace off the plans, in effect, back in the day. Never been done before, so probably my claim to fame and the most innovation I've ever experienced would have been that project in my early 30s. So yeah.
Symon, you've been quite an innovator, and you continue to be an innovator. And in fact, I think one of the spaces that you and I really enjoy is plugging our heads together and getting excited about buildings and innovations.
Well, you can't be developing or anything to do with the industry unless you get excited about buildings and producing something. There's nothing better than I suppose, firstly, working on a transaction and negotiating with the vendor and all the parties that are involved to the point where you've acquired something under a due diligence period, then progressing it through with your vision and your team's vision, and then transacting on it, and then seeing that vision come to fruition. And I found as soon as I started doing that, it was just endlessly exciting, endlessly creative. I didn't actually think I had a creative bone in my body when I was in my 30s. Believe it or not. I mean, probably because I couldn't draw, I still can't. My handwriting's like a duck walking on a page. But the truth is, I realised I was quite creative, and I think everybody is. And I think if you enjoy what you do, you're always looking for ways to improve, to be better, to innovate, to create, and that's sort of been the end of the market that I've always enjoyed and continue to do.
Well, I can vouch for your creativity because I've seen it, I've worked with it, I've seen you operate, and I would say two things in your favour is passion, determination, and most certainly creative. And it's creative thinking, Symon. So don't underestimate yourself. So, Symon, we're talking about housing and scarcity and inequality becoming slightly urgent, slightly. What solutions do you propose? I know you've got quite a couple of solutions up your sleeve. You're busy working on quite a couple of projects. Let's nail straight into them.
It is a major problem. I mean, scarcity of rental properties is, in some of the locations is 0.5%, available rentals for people. And then, of course, a lot of people's demographics have changed. People live in a different way to what they did 20, 30, 50 years ago. So there's a built-up pent-up demand for spaces that suitable for a single person or a couple. And back in the day, they were the old boarding houses, but they're pretty ratty, and there hasn't been a lot of, in Queensland, there hasn't really been a lot of sort of modern style, new age sort of product. And a few years ago, I sort of got really thinking about what I wanted to do for the rest of my days doing this business, which hopefully go on forever because I never see myself retiring. But how can I do something that's impactful, that's valuable, that's worthwhile, that makes a difference in people's lives, makes profit for investors, and it does something with the environment, your sustainability, all at the same time. And I basically came to the conclusion, and the conclusion that excited me, it was this space. So, innovating and working around how to solve as best as we can do and as big as we can possibly do the social issues around housing. And yes, we have got some ideas. There's governments. There's not-for-profits. They're all doing things. Yep. And we've taken it from the approach of, well, let's see what the private sector can do. And just to fill that out a little bit without going into too much detail, we've all heard of build-to-rent, BTR. Build-to-rent's primarily designed, and nothing wrong with it, to get over rent, like 20% over the market. And there's a huge space for that. It's obvious. But there's not a lot of scale development going on where it's under the market. And that's actually where we're aiming.
You've touched on a couple of points there. And one of the things that we are going to be talking about is for our audience to be doing well while they're doing good. And that's kind of what you're doing at the moment. You're building or developing structures that are going to be doing well to society and also doing good to the society. So with the unlimited demand that's in the market right now, is that a space that you're seeing yourself in?
Well, that's the space we are in, actually. Oh. So the reality is, I call it the triple bottom line, and that's a term that's been used widely by larger organisations. I say, and our challenge that we put to ourselves as a team is let's achieve a triple bottom line, i.e., making good returns for investors and in fact providing affordable homes, which is the social side of it, and at the same time building it and developing it in as most sustainable way as we can do, and then continue to iterate and be inventive and innovative to keep on improving every single aspect of that. And that's the journey that we're on. And quite frankly, that's what gets me excited and gets me out of bed every morning. And I always ask people when they work with me, for me, or whatever, about their lives and, what gets you out of bed in the morning? What makes you want to get up and go and do something? And frankly, for me, this is what gets me excited. So.
And that's the passion that's coming through, isn't it?
Yeah, well, I'm holding the passion back while I'm talking on this. But I feel a burning fire inside to do something that's really impactful. I suppose at the end of the day, for myself personally, it's a legacy for 360 Collective. We're building a team of young people that are learning and growing in the business. A few of us older guys are there to guide them and mentor them, but they're the legacy. They'll be the people that continue to do this, and we believe we'll be successful. And if we are, we'll make an impact in this country. And that's what I think is worthwhile doing today.
Do you think your approach stands out against your competitors?
Well, in this space, I'd say yes and no. So governments and, as I said, not-for-profits are out there doing their bit and doing what they can. I think where we're different is we're coming from the private sector and we're saying to our investors, hey, how would you like to be involved in something that you can make money, feel good, do good, and make a difference to the environment? They are the investors that we're looking for, Mish, because there's been some research. 70% of millennials are looking to invest in companies that have a triple bottom line approach to the world. I think the world needs more of it, and I know there are plenty of other people doing a lot of great things. So we don't own that space, but I think in Australia, and I think in the specific area that we're working in, we've got a good chance of owning that space, and I fully intend to do that. I fully intend to make as much impact as I possibly can.
Well, Symon, I'm going to share on the screen a little project that you and Owen are very busy on at the moment. And I must say, I've spent a little bit of time with you, very little time on this project, but what I have seen of it has just blown my socks out. Do you want to speak a little bit about it? It's the Timor 34 project. For those of you that can't see the screen, I'm looking at a very new age building. Symon, I'll leave it to you. Tell us about it a little bit.
Well, that's an architecturally licensed picture that you're seeing. And that's the goal is to achieve something that looks like that. We've gone through quite a few hoops with the council on it. And we're just at the very end of that process to gain our DA, and we'll start construction next year. It does look pretty much like that, slightly different configurations in some areas, but mainly because of the council needs and requirements. It was a code accessible site. In other words, it's zoned for what we're doing. We're putting 72 single occupant rooms in this building. One is for a manager. So the idea is that if you get enough scale on a site, you can have on-site management. There's a whole lot of good reasons for doing that. Obviously, there's a bit of cost, but the benefits well outweigh that. So, we've got security. It's, women over 50 that are basically single, divorced. There's a lot of people like that. It's a demographic that's well underserved, and young professionals. So we're going to mix it. But the project is designed as a rooming accommodation project, but of a scale that we believe is institutional grade in terms of the final goal and strategy for us. So our goal is to build a number of projects similar to this in the SDA space, in the rooming accommodation space, affordable housing space. And this is our inaugural project. And, we've got a fantastic architectural firm, Gensler. They're the largest architectural firm in the world. They've got 6,800 people. They're in 52 cities globally, a massive research department. And we chose them because we wanted the credentials of a company like that are globally thinking. We want to bring global ideas to Australia, and we want the best that we can possibly glean from other countries and bring it here.
Now, what is outstandingly different about this project in particular to most of the multi-level houses of multiple occupancies?
Well, it's a good question. So there's a fair bit of innovation in this project. So without getting into a lot of heavy detail, the construction design is a Class 1B, which is just over the design of a home. We've got a great team of consultants that have helped us do that. And because of that, the cost to build this is lower than, Class 2 or 3 building. So there's quite a substantial amount of innovation. It's designed in lightweight materials. It's designed in modules of, on that picture currently, modules of 12 units per building, if you like. There's 6 buildings there. And each of them has one universal access room on the bottom. Everyone has their own kitchenette and ensuite in their room. It's fully furnished. It includes power. We're putting solar power and batteries in. It has other environmental innovation around, things like the driveway allows water to soak through it. Those sorts of things. Again, without getting into heavy detail, but everything, we've thought of every single area that we could innovate in, and we have. It has provision for lifts. So every stairwell, we're able to build lifts in at a later stage. We've designed it to take air conditioning. However, we aren't going to put air conditioning in to start with because the architects have designed it with good airflow. That's bringing their technology to the table in Queensland. So we're working it in that direction. It has communal lounge, kitchen, outdoor areas for each of the 12 units in each pod. And on top of that, from a risk mitigation perspective, we're able to strata title into 6 separate buildings. Now, we would ideally never sell a building off. We'd really want to maintain and retain this as a build-to-rent product. But we've built in flexibility, as I said, from that risk mitigation strategy. If we ever chose to or needed to, we could do something like that.
You brought some amazing technologies into this building. If I stand to be corrected, there was something about the Wi-Fi and shared vehicles as well, scooters, bicycles, cars.
Yep.
Something that's fairly novel in...
Well, it's becoming less novel. So again, I don't want to sort of say we're being hugely novel, but I suppose in the way we've thought about this building right from the start, yes, the idea is to have electric vehicles at a shed. So you might have one per pod. It's charging stations for that as well, of course. We're looking at buggies, like the golf buggy scenario. This is only 1.4 k's from a major shopping centre. So, and also public transport's close by. So not everybody needs a car. And the idea is to build buildings where people don't need cars. And there are some car spaces, not one per unit.
You can have some of those little mobility scooters, Symon.
Yes. We're already doing a lot of study on it. We're talking to companies that can provide them. There's licensing, there's red tape to go through, but we're not going to give up. We'll just keep pushing in every single area, push every single boundary till we get what we want, or something close to it, and get better each time. And I think that when we've got this building up and people see how good it is, with the quality that we've put into it, and it's affordable, we're talking rents of, $280 a week sort of thing, $260 to sort of $300, depending on which one and whether you have a car park or not. That includes your power, that includes the cost of your services, high-speed internet. It's not just NBN. You can get private fibre. We're doing private fibre because Owen's a specialist in that area as well. Owen's our development manager. And, we just want to give the absolute best for a really reasonable price that most people can afford.
Well, I think that's quite amazing. And this is the first one that you're doing, and I know that you have secured something across the road. So you're looking at doing a project 2 already, or phase 2 of the same thing right across the road. So watch the space. People will keep you posted as and when we go. The other thing that I'm super excited about from a commercial point of view, Symon, is the commercial aspect of some of the developments that you're doing. So this is a development that you're busy doing in Burpengary. We've spent a couple of hours drilling down on it. Do you want to speak a little bit about what you're doing on this one?
This is industrial, a bit of office space and a little cafe. So it's a 2-hectare site. We've got about 9,300 square metres of building. Strata title is 40 sheds, effectively, or 40 units and sheds, ranging in size from, small offices around 60, 70 square metres up to larger sheds at around just under 500 square metres. We bought this, I contracted it at the beginning of last year. It had a DA, but it wasn't developed by a developer, so they didn't do everything the way we would have done it. So we spent most of this year, adjusting the DA and getting the operational works approvals designed and done. So we've done a substantial amount of reworking of the project. It's an exciting project. It's Burpengary East. There's virtually no supply for this sort of product. There's plenty of demand still, even though the market is changing, and everyone acknowledges that. Construction prices have dramatically gone up in the order of 30-35%, but so have values as well now. And anyone that wants to build something like this these days will be selling and pricing it at a different range as what you would have been a year ago. This is quite a large project. It's got an end value of about 35-36 million, and it's significant in this area. But there's good demand. I mean, there's so much growth going on in that northern corridor. It's incredible. So I've got really, obviously, a high level of confidence to be involved in a project like this. One of my companies basically is the project manager on the project as well, and I have a relationship with 2 other fellas, and the 3 of us are doing this development. It's one of 3 that we've got on the board, but similar. We're doing the man cave type developments as well. One in Rothwell, and we've actually got one up in Yeppoon we're currently getting a DA up for, which is a mixed-use residential commercial sort of mix. So again, I like that innovative space. I like that it's interesting. There's huge demand for storage. People are buying houses, out in Rothwell area, where they're paying, a couple of million for land in a house or more, and that they've got no storage. There's no land. So there's a demand for that type of product, smaller spaces, between 70 and 150 square metre sort of interesting spaces, not just a old warehouse, something that's a bit attractive and stylish.
I often use the phrase with you, they're sexy buildings. Make them look sexy and the masses will come in the droves. The interesting thing is you're doing this in stages. Do you want to just talk us through those stages? I think 4 stages in them, and what they'd essentially be offering.
The first stage is the civil work. There's a substantial amount of civil work to go on the site. Second stage is 2 buildings, which is each building's cut up into multiple units. So buildings 1 and 2, and then 3, 4, 5, and 6. So we can roll through the project. If the market changes, we can stop and, stage 1 or stage 2 or stage 3. We're not anticipating it, but it's always good to have. Again, risk mitigation is, after all the years of development I've done, it's more important to think about your risk than it is about how much profit you're making, quite frankly.
Absolutely. People often ask me, what is the cost difference between developing versus an existing property? I've always said, buy existing bricks and mortar. You can see what it is from day one. However, since being working with you for the last couple of years, my ears and eyes are open to developing. What do you think the investment potential is? What are the upsides for developing versus existing?
I've done both. You and I did that project in Bundle, and it was an easy project. Like, we bought, existing warehouse with 5 units in it. It was 40 years old. It's quite old. We gave it a bit of a tidy up. We didn't spend a lot of money doing that. We had to go through some pain getting approvals to strata title it, which we did. But, the project made a 17% margin on cost. What I'd say about that sort of project, say, as an asset class to buy into, is it's got lower risk profile, in my opinion, because we didn't need to get a DA out for a start. We didn't need to get a BA out. We just needed to get a certify and satisfy them that we had, the requirements to achieve a strata title, and we did that. We had product to sell on day one. As soon as we got disclosure plans out, we were able to start selling, and people could step into the building and look at it. So we weren't selling off the plan. So there's a lot of advantages. It's not every day you find a project like that. I know some of the investors were pretty excited about the returns that they got, and they should be, because, one of them said, I think on one of the webinars, it's a once in a lifetime. Well, I've done a few like that, so it's not a once in a lifetime. But I have to say they don't come up every day, and we're always looking for those.
They are the golden needle in the golden haystack, because I am looking for those every single day. And what we're finding in the market at the moment is they're out there. But I think sellers are being a little bit unrealistic about their demands on those properties.
Well, I'll tell you the 2 things that I think are why they're so good. One is risk profile. As I said, I've got grey hair, as you can see, so I'm only 30. but risk, and think about how you're going to deal with that, and what is the risk. And one of the things that it took me a couple of decades to work out, the biggest risk a lot of developers don't anticipate very well is the risk of time. And time means, markets can change, environments can change, appetites can change, economies change, the globe changes, there's wars or whatever. So the quicker you can be in and out of a project is quite a large level of risk taken down, as compared to doing a development from start to finish. And as a comparison, the Burpengary project, we've been there now a year and a quarter. We'll be there probably another 3 years by the time we finish. That's a 4 to 5 year program, And we didn't even get the DA out. It was already there, but we revised it. So, if you got a DA, it could be anywhere between 3 and 6 years. Anything can happen. I've always said that you can project what might happen in the next month, what probably is going to happen in the next quarter, what maybe happen in the next 6 months, and a good chance at 12. But after that, forget it. You've got no chance, virtually. I reckon anyone that reckon they can predict past a year, good luck to them. I don't attempt it. But what I do is I think about, how do we get in, how do we get out, what are our options, what can we do if something happens and it didn't work out the way we expected.
Yeah, and we were talking about a Toowoomba project earlier on today, and I really love the way that you've brought that risk mitigation in by showing 3 scenarios, so 3 exit strategies on that project, which I think is fantastic for you as the developer and for the investors as well. So, Symon, how can our listeners get involved with you?
Well, we bring project by project, to the table. So, for example, that one in Toowoomba, we've virtually, looks like we've probably filled that, but we're looking for wholesale professional investors to get involved with us. And really, that's the best way. Primarily, they can talk to you, and you've always got access to what we're doing. You know what we're doing. We bring things to you, Mish, and you have people interested, and we're building our own process and a profile as well out there. And you can call me direct, you can email me direct. you can go to Mish, whichever way works for you.
We're going to put the contact details up there, and I've just popped onto the screen the QR code. If you want to get involved, or you'd like to know more about any one of the other projects, the Toowoomba project at the moment is the one that's open right now. We haven't presented it here, however, we do have everything set and ready on the Toowoomba project. So if anybody is interested in getting involved in the social impact project, reach out to us. You can scan the QR code that's on the screen right now, book a call. We offer a free wealth grow plan on revolvecommercial.com.au. Symon, thank you very much for spending this time with us. I know you're having a crazy day today between lawyers and scooters and jumping from one city to another. But I think this is really valuable information on social impact and how our audience can get involved.